Can you tell me what you think makes a good entrepreneur?
Oh, okay. Well, there's
qualities of an entrepreneur.
Yeah, the qualities of an entrepreneur. Well, somebody who's got a lot of integrity to begin with. You're going to go through a lot of twists and turns and challenges and missteps and whatever. And if you don't have a lot of integrity and a lot of steadfastness, you're not going to be able to be a good entrepreneur. You have to be, and I think everyone says that you've got to be passionate. And we'll talk a little bit about this later. But it's passion by itself is not enough. You have to have decided that you're going to dedicate your life, or at least in the foreseeable future, to what really amounts to a cause, and that you're going to defend that cause no matter what comes your way. So you're going to plow through obstacles. You're going to change course, you're going to do this, you're going to do that, just simply because you have one objective in mind, which is to fulfill that expectation that you have that you're going to change the world through what you're doing.
What was your first entrepreneurial endeavor?
My first entrepreneurial endeavor was actually to launch the first computer magazine in Brazil. And
how'd that go?
It went badly and it went well, and this is kind of typical of all endeavors and how they work out. I launched Brazil's first computer magazine in 1973 or 4, whatever. So you can see that I'm really
when you were 4 years old.
I'm really aging myself here. And it was during a period. Well, first of all, the reason why I launched it is because they started to be in a tremendous amount of importance or following about computers. In the 70s, way before PCs. So we're talking about the mini computer revolution. That suddenly a lot more enterprises, a lot more people had access to IT or
Sure.
information technology. Brazil in those days was run by a military dictatorship, a junta, and I launched the magazine. Very successful, very quickly, because all Data General, DEC, all these people wanted to advertise. And it was the only one serving the IT community in Brazil. And then a few months into it, the military government decided that computers and IT technology was going to be a matter of national security, and that they only wanted Brazilian companies to make computers, and that everything had to be localized. So literally from one day to another, everything dried up. All my advertisers abandoned me, and then I had investors who were, very interested and continued to be very interested, but they couldn't continue to fund the business. So that was the bad part. The lucky part is that I had been approached by an American company, IDG, which was in those days the largest publisher of computer newspapers and magazines in the world, Computer World and IDC and brands like that, who had showed interest in Brazil, and I managed to sell them the business. And I continued with them, and we built a whole network of computer magazines, computer trade shows throughout Latin America very successfully as a result of that. So out of this kind of bad moment came a really good thing,
Sure.
which is that I was able to have the resources to build something that turned out to be much bigger.
Do you think you would have looked to sell that business had the political climate, economic climate not changed the way it had?
Probably later on.
Yeah.
I was kind of first-time entrepreneur. We were doing it on a shoestring. Clearly, it required more resources, and eventually I would have sold it. I don't know if I would have sold it to an American company. I could have sold it to a Brazilian venture or Brazilian magazine publisher or media company, and who knows?
Changed your whole fate.
Yeah, it would have exactly.
Yeah.
So it's the butterfly in China that changes your
Right.
your destiny.
Right. We wouldn't be here today, possibly.
Possibly.
So
Exactly.
when do you think, this is something that people, sort of the four-letter word in entrepreneurship is when to quit. And do you have any insight on when an entrepreneur, I'm someone who, I focus on the end game, but I know that you hit a lot of bumps along the road on the way. Do you have any anecdotes of when you see when entrepreneurs maybe go too long, or what's a milestone that's perhaps the time to say it's time to call it quits?
I think it's time. Calling it quits is I don't see too many people calling it quits. I see people adapting and changing, and sometimes reluctantly. Often because they see that things are going to go in a different fashion. So actually calling it quits, I really don't see that too often, particularly after they've taken money from investors. Once you've taken money from investors, you have a responsibility. And it doesn't matter what happens if you get disappointed, what happens in your personal life. Your wife might say, hey, it's about time you came home with some sort of a salary, those kinds of things. Fact is, you've taken money from.
That's what you signed up for.
You've signed up for it, and you've got to, see through it. What we do see is founders who don't realize at times that it requires a different kind of management. That once the company grows, maybe it is time to bring on a CEO, or maybe you as a founder are better suited to be head of technology or head of business development. But it's very, very difficult for obvious reasons for founders to come to that realization. And often when it's necessary, they're being prodded by their board or by their investors, and sometimes they wait too long. And that can have hard effects, disastrous effects on the company.
Sure. So can you share any experiences, perhaps, as CEO of the Huffington Post, of times of failure, of missteps along the way? Because I find that there's a lot of lessons and insight in failure. And do you have any anecdotes of things that you could share of times when things didn't go as planned and how you adapted?
Well, at the Huffington Post, we were in constant development mode. So what really worked for us, and I think is something that I would recommend to everybody, is don't look at your product literally on a daily basis. In our case, we were looking at our product on a minute-by-minute basis because our technology allowed us to measure the engagement that our users had with the content literally in real time. And as a result, if a story didn't work, or if we did something that didn't work, we would immediately correct it, and or say, well, maybe we should do it this way, not that way. So as a result, we really didn't have too many kind of failures. We were testing, by the time we sold the business, we were testing local editions. So it's
things like Patch?
A little bit like Patch. Ours were a little bit more metropolitan, so we had cities.
Sure.
New York, Denver, Chicago. So we had 4 tests going on. We had 2 big cities, New York, LA, 2 different coasts. And then we had kind of 2 smaller cities, Chicago and Denver, just to try to understand, the different effects at work. Some had big newspapers in place, others didn't, etc. So by the time we sold the business, we had not expanded on. We started those 4 and we had not expanded because we hadn't found kind of the magic formula. We hadn't found the right path towards making it into a business. It's one thing to sell national advertising, and it's a completely different thing to sell, local, let alone hyper-local, which people are trying. The fact is, it's true that there's a huge amount of business with local merchants, and look what Groupon is doing is really kind of picking up on local advertising.
Right.
But we hadn't found the formula, so in a way that was kind of a failure. But we weren't about to give up.
Sure.
Right.
There must have been times throughout your career, whether at Huffington Post or otherwise, where you look back and say, maybe that was a mistake, maybe that was something I could have done differently, something that kept you up at night. What are times? I understand. I mean, I think that the best traits of an entrepreneur are learning from those things and adapting, which it sounds like clearly the things that you have been doing. But can you share any specific stories of times when a decision went a way you didn't expect, or maybe a partnership agreement didn't work out the way you thought it would, and how you had to overcome what you expected to do?
Well, but in my career, I've invested in companies that have failed, and it's always regretful.
Right. Those are really other people. I mean, obviously you made the decision to invest, but I'm looking for something that you've been more in control of.
Well, also when you're launching products. So at Ziff Davis, we're constantly launching new magazines or new trade shows or conferences, and sure, I mean there were times where you were absolutely certain that this particular idea was going to work, and you committed $20 million to the project, or maybe the one that actually was the biggest one was TV.
Sure.
Right. We launched a cable network called ZDTV, and it's one of these where if you knew at the time that everything that you learned along the way, you would never do it. Which of course, and then of course most entrepreneurs would never get going, right? Because
if you know what you're in for, you might get a steady job.
That's right. But the TV business is particularly difficult, and particularly in those days, it was kind of at the end of the analog channels, the beginning of the digital channels, the networks. The cable operators didn't really want to carry you on their analog, but that was really the only way you could get penetration. So it got very, very complex and very complicated. And it was very expensive. You had to build facilities, you had to build a studio. We built a studio in San Francisco. We ended up spending about $100 million, which, for us was and I had to sell that idea to my board. And then I had to say, at first I think the project was 50, and then I had to say we need another whatever. And eventually we ended up with 100. And so those are, I remember going to the board meetings and having to justify all this and kind of promising that it's going to work somehow. Because if the CEO is not convinced, then
you can't. Yeah.
How are you going to sell that, right?
If you don't own it.
Again, we got lucky. We were able to sell the business to somebody else. We recouped our investment. It wasn't the success that we expected, but at least we recouped our investment, but there was no certainty that was going to happen.
Sure.
So that kept me up at night for many months.
Last question. Two questions actually. First is the current investing environment. Have you found that, especially in early stage seed or Series A investments, that it's quite competitive, and that even during the course of negotiations, valuations will change? And if so, is that something that would turn you off as an investor, or do you just see it as a sign of a potential hot investment?
Well, you have to take it case by case, clearly. And clearly today's environment is one where it's a little bit overheated, particularly when it comes to valuations. And so as an investor, you have to maintain discipline. Now, it doesn't mean that you have to be on the sidelines. But clearly, we're investing today at valuations which are higher than they were just a year ago. But we are passing, I have to say, today we're passing on more investment opportunities because of valuation than pretty much anywhere, anytime in the past few years. So that at some point, discipline has to kick in. Look, the fact is that despite these high valuations, the M&A market hasn't really moved in terms of price. Now, yes, we've had a few IPOs recently that have been
high profile.
Yeah, multi-billion dollars, and hopefully deservedly so. But it's only a few. It's less than a handful. And yes, there are other IPOs in the pipeline that are highly promising. Probably the best one being Facebook. But again, you're not talking about a huge number of companies. So the great majority of exits will continue to be through acquisitions. And if you look at the M&A market, the fact is that if you have a successful company, so binary, you're successful, you're not successful, right? So forget all the companies, which is probably the majority, that will never succeed.
Yep.
So if you have a successful company, after a few years of hard work and spending evenings awake at night, you'll sell your business very likely for somewhere between $50 and $100 million. So that's a fact. And it doesn't matter. It's across pretty much all technology sectors. Mm-hmm. So in other words, the companies that sell for $100 million above, we at the Huffington Post sold for $315 million. We were by far an exception, an outlier. That's not what's going to happen to most people.
Many more $10 to $30 million deals, or
yes.
20 to 50s.
Right. Yeah. So $80 million, is a good price. 50 is a good price. So you can then work backwards, and if you have a seed round that's in the high single digits, and if you have an A round that's in the high teens or low 20s, it doesn't leave much room for error. And VCs take high risks, and they deserve, when successful, they deserve a high return,
right,
because that has to make up for all of the failures.
Yep.
Right?
One has to carry 8.
Yeah. So at some point, the math has to come into play, and when we do walk away, somewhat reluctantly perhaps, and then I can also point to moments where we have walked away and the company has sold for $300 million, whatever, and we should have invested. But you can't win them all.
Right. You lose a lot more.
But you have to have a point of view.
Sure. We'll back to your disciplined investor approach.
And the fact is that what turns us off is when the entrepreneur sees valuation as the primary driver, as opposed to forming a syndicate of investors who are truly going to be helpful to the company.
Yeah.
So if that's the primary driver for the entrepreneur, that will turn us off, for sure.
Sure.
Because we don't believe that entrepreneur is thinking the right way. It's hard to build a business. It takes a village. You need to surround yourself with really high quality people, not only people. And we saw this in the crash of 2000, right? The last money in, which was not the professional money, it was money coming from mutual funds or big banks. That's the money that was driving these super high valuations. That money was the first money to leave when things got tough. So they're not the ones who
take the big risks.
Yeah, and they're not the ones who kept going, supporting. They didn't put more money in to support the entrepreneur. They just simply wrote it off and walked away.
Right.
So for the entrepreneur, that's not a good thing to happen either.
Well, I was going to ask you what your best advice for a startup entrepreneur was, but I think you said do things which is surround yourself by smart people, and it takes a village. Anything else you'd add to that? Yes and no. I mean, surrounding yourself with great people is essential. Find great co-founders, and a lot of companies have great ideas, but the technology is not fundamental to the business, and it should be fundamental to the business. Because ultimately, what's driving value in what all of us do here is that technology, software is changing the world. Yeah.
And so we see too many entrepreneurs who are, have a great background, very expert in what they do, but do not consider technology to be as important as it should be.
All right. Well, thanks a lot for sitting down with us. I really appreciate it.
My pleasure.
All right. I think we'll